You're listening to Market Champions, a podcast on navigating the financial markets. Here's your host, Srivatsan Prakash.
This episode of Market Champions is brought to you by Simplified ETFs. For more information, visit simplify.us. No simplified funds will be discussed during this podcast. Hey guys, welcome back to another episode of Market Champions. I just wanted to remind you to like, subscribe, and leave a comment. Really helps the page grow, really helps the podcast grow. Thank you so much for your support. And now on to the interview. Hi everyone, welcome back to another episode of Market Champions. Today I've got one of my good friends and one of my favorite investors, Andy Walker, and he's one of my favorites because I know him personally as well. So it's great to have you on. He's here to talk about the case for SMSI, Smith Micro, which is a stock he's super bullish on. I believe it's our largest position as well. So he's here to talk about number one, the case for SMSI. Number two, sort of describe what's going on at the company, and just a deep dive into the stock really. And thank you for being on the show, Andy. And for anyone who might not be aware of who you are and what you do, so could you just sort of give a quick introduction of what you do? And yeah.
Yep. Thanks for having me. It's a pleasure. Long awaited.
Yeah.
Probably one of the best finance podcasts available out there, ran by such a young talent too. So happy to be a part of it. Happy to help you in any way I can. So for me, I graduated college about a year ago. I work in physical therapy at a local hospital. I work in ortho and neuro. I work with stroke, spinal cords, etc. But really, that's just my stepping stone into being a full-time investor. Obviously, when you're 24 years old, you don't necessarily have the cash to instantly be a full-time investor. So life is quite the grind right now, 40 hours a week, waking up at 5 a.m. to research before going to work. It's busy, but it's the love of the game, and it's what it takes. There's obvious steps to reach the goals of financial freedom and just basically the freedom to continuously learn on your own. So it's kind of where I'm at in life right now. But I also work with Tyler. Tyler's been on the podcast before, Tyler DuPont. We have Augury Research, which is a subscription research service where I document Smith Micro, as we'll go over today. There's a bunch of other companies that we cover. We own full access and transparency in the portfolio. We do monthly portfolio breakdowns with all the subscribers. And that's Augury. So I guess I can jump right into Smith Micro.
Before you jump right in, quick disclaimer, both Andy and I are long SMSI, and obviously, none of the information that Andy's about to provide should be counted as financial or investment advice. Consult an investment advisor before you make any decisions related to the information that's provided. And with that, let's jump right in. So all to you, Matt.
Okay, yes, definitely long Smith Micro. Common shares have options out there as well. So full disclosure. So we'll hop in quick with company overview. So Smith Micro has been around since, I want to say, early 1980s, still ran by the founder, Bill Smith, who is the current CEO. So currently what Smith Micro is up to is they have a family safety solution, and they white label this solution for mobile carriers. The family solution that they have is called SafePath. So quick little background into what the app does and the functionality behind it. So the app allows parents to control internet usage, app usage, restrict websites, restrict screen time. It also allows for them to reward kids with more screen time. So if they show their parents that their homework's done, they'll give them an extra hour of Xbox. And that's also something that's special about the app, is that it's completely cross-compatible between Android to iPhone. And the newest SafePath 7.0 is going to allow you to connect to your home router. You're going to be able to control your kid's PlayStation, your Xbox. This is something that so some people make the case that, Apple has some of these features and they're going to keep releasing it. But yes, that's iPhone user friendly only. It won't have the cross compatibility likely with Android and other devices throughout the house. So that's something special about it. But recently, I really like this edition. Is in the past couple of months, they had a press release and they announced the release of SafePath Drive. SafePath Drive, a really cool feature for new drivers. It'd be really interesting to see if they can ever get connected with insurance companies on this. I know there's things out there similar, but the SafePath Drive allows you to track your kids driving, where they're going, how fast they go, how hard they brake. It lets you even know when they're just in the car as a passenger with one of their friends that's a new driver, so you know who you want to let your kids ride with, what they're up to. It kind of sucks to be a kid and have those controls over you, but this is just realistic. This is kind of where we're headed. There's a lot of validation in the market with Life 360. Microsoft has a little family safety app they never really put much effort into. But the closest competition, and if you're kind of looking for a peer, would be Life 360. But they're Smith Micro is a little bit differentiated from Life 360. So the product is nearly the same. There's a lot of similarities in the product, but they're competition, but they're not at the same time, because Smith Micro is engaged with the mobile carriers, which we'll get to, Verizon, T-Mobile, and AT&T. So they're all currently customers of Smith Micro. So Smith Micro has this white labeled product that they deliver to the carrier. And then the carrier does all the marketing spend for it. And then they have a revenue split agreement, versus Life 360 builds the product, does all the R&D to build the product, continually updating it. But then they also have to spend to market their product. So that's something that's just super special about Smith Micro's business model, and kind of the operating leverage of the business model we'll get into a little bit later, is that they're just running the product and they have like next to no marketing expenses. There is marketing expenses on the income statement, as you'll see, but it doesn't need to increase as product adoption happens, because the mobile carrier is going to do that for them. So as I said, with these mobile carriers, SMSI has the entire carrier market cornered right now. So they have AT&T and Verizon, which are two new customers who they got through the Location Labs acquisition. Location Labs previously was providing the family safety app to AT&T and Verizon, and SMSI was in the running to win the Verizon contract, but Location Labs basically offered their product just to keep the customers dirt cheap. Verizon didn't. They liked Smith Micro's product, from my understanding and contacts I talked to. They really liked the robustness of Smith Micro's product, but there's a lot that goes into switching. There's a high churn. There's people that are paying for the app. A lot of people don't even know they're paying for the app, and Verizon just collecting that cash. And then they're also built into the back end of the system, all the different billing points. So for Verizon to go in and tear out Location Labs, cause the boatload of churn, probably a little bit of customer poor satisfaction on that point, and replace it and get brand new adoption or carry those customers over, very difficult. So Verizon was pretty happy, from my understanding, about Smith Micro acquiring Location Labs, because now they can merge the platforms together. Verizon's going to have a better family safety app to offer to their customers and lock customers in and increase their average revenue per user. And the same thing kind of happened with AT&T, except when they bought Location Labs, the contract is about to be open for like renegotiation again. And originally AT&T was like, no, we don't want to offer this. We don't want to make extra money. Basically, I mean, that's kind of what they're saying, because there's not a lot of work on their end besides marketing the product and offering it. But AT&T actually came back and said, yes, we do want to offer this product. And it just kind of the value that something like Smith Micro can offer to these mobile carriers is that they have very few things that they can offer that'll increase their average revenue per user, especially something that's easy and effective. And there's already demand being created for this product. So again, the product is made for them. They just have to market it, and then it's just recurring revenue from there on a monthly basis. They can charge $10 a month. In fact, in surveys that Smith Micro put out, people were willing to pay $15 to $20 a month for this product. They could easily charge $10 a month, hit a 50-50 revenue split for them, and both companies could have a lot of extra cash flow coming in from the product. Now, let me think. I got some notes here. I have a lot of information that I can share, so I'm trying to narrow it down to what is most important for everyone to really get the gist of the thesis. So let's step back with Smith Micro into like about 2018 timeframe. So the first adoption of their SafePath product was with Sprint, and we know that T-Mobile acquired Sprint. That whole merger's a little bit of a mess right now, but So SafePath was adopted by Sprint. Sprint had awesome marketing efforts. If you went in their store, you could see it. All their salespeople were very well trained, and you could see this in the rate of adoption and the cash flow and revenue growth at Smith Micro. So they launched in 2018, and then through 2019 at Sprint, we're looking at like 75% quarter over quarter growth, 50%, 35%. Obviously, law of large numbers, it's slowly decreasing, but they eventually penetrated around 3 to 5% of Sprint's customer base within like a year and a half. And it was still growing 20% quarter over quarter come the merger and pandemic to when Sprint stopped marketing. There's a whole slew of other information with the merger that we could possibly get into later. But the bottom line is that the product was still growing 20% quarter over quarter. And they were on a 40-cent EPS run rate while this product was still growing. And Sprint was they were the smallest mobile carrier out there. I mean, there's smaller carriers like US Cellular and stuff like that, but I'm talking about the big ones, Verizon, T-Mobile, et cetera. They were on a 40-cent EPS run rate with Sprint alone. The total addressable market at AT&T and at Verizon and T-Mobile is multiples above what they did at Sprint. And they can show the success they had, how they did it, the marketing plans they had. And that's why I think they're going to be so successful as this product begins to roll out at Verizon and T-Mobile. Some things that SMSI investors aren't necessarily happy with, and I'm assuming a lot of people are on the sidelines because of this, is that they have T-Mobile as a customer because back in February 2020, the company acquired Meet Circle, which provided the family safety solution for T-Mobile. They acquired that, integrated the best of that product in to create SafePath 7.0. The company is giving guidance that as soon as SafePath 7.0 is finished and completed, they're going to be launching at T-Mobile. It didn't happen. The launch was delayed. And again, this is probably low on priority list for T-Mobile management going through this entire merger process, which I imagine is just extremely difficult. But it was pushed back, and we were given for like 2 quarters in a row. We're given a hard guidance from Bill, who tends to overestimate a little bit. Never doesn't really lie, just overestimates that the product was going to be launching midsummer. The product never launched. The excuse we were given, and which I confirmed through research and with a lot of colleagues and other people I work with, that there was a reorganization. We found it on LinkedIn. We have information on that. None that I'm necessarily going to share. I need to keep some of my edge in this investment. I can't give it all to you. I'm feeding you a good story here, but a reorganization did happen. It looks like things are still definitely on track with T-Mobile. There was some worry that maybe T-Mobile was going to maybe try and create their own, which I think would be silly, all the R&D that they would spend and the time it takes to build a product like this when they could just do it with Smith Micro. Or there was also the concern that they're just not going to offer a family safety solution at all. But I just don't think you can that's not even an option in my mind to not offer a family safety solution when you already previously offered it. There's obvious market demand. If you look at Life 360 growing, they can show the success they had at Sprint, and they acquired Sprint. They have that whole marketing team that was in charge of it. And they can just increase their average revenue per user and lock them in even further to their services. Just silly. It's things happen, things get delayed. I mean, I just think about when I was younger, I lived pretty rural, and a super Walmart was a big deal, and it was going in a town near me, and it was guided for 1 year, and 3 years later, it's eventually finished. Things get delayed, especially in a situation where T-Mobile is merging with Sprint. But I think the probability of them signing the contract and launching is like 95% in my mind. It's just a matter of timing. In fact, I was in a meeting with the CFO who just left, and they were rather confident that this contract was going to be signed. And you can see in the last conference call that Tim said they expect to sign it by the end of the quarter. If we don't see that signed by the end of the quarter, there's definitely going to be some negative reaction in the share price. And then I guess it's up to the individual investor to weigh probabilities of how soon they think Verizon could ramp and how much AT&T will ramp, because I think there's a limited downside with where we were purchasing the stock. We were purchasing down at $3.50, $4 per share. I think there's a really limited downside for there, because you're looking at a company that has all 3 major carriers signed. They have a absolutely best in class product, I'm just wondering, how bad can it really get for this company with a best-in-class product and the top mobile carriers with a massive total addressable market? Then there's also concerns. I know I might be all over the place. There's a lot to unpack, and I get excited when I talk about this. But another concern with T-Mobile and say a new renegotiated contract with Verizon would be that the Sprint contract deal was 50-50 revenue split. So T-Mobile definitely probably has more leverage over Smith Micro, even though T-Mobile has nowhere to run. Smith Micro has no competition after buying Location Labs because Life 360 doesn't white label. So T-Mobile has no one else to go to. So Smith Micro is only there. So they got a little more leverage with that. But really, Smith Micro is dictated by the carriers. So there's concern that they might not get a 50-50 revenue split there. But with how large the total addressable market is, like multiples bigger than Sprint, even if they were given 70-30 revenue split, I've already ran the math on it. This company can easily be doing a greater than $1 EPS run rate on a subscription software service with gross margins that will be increasing back to 85-90%. They're just a little low right now after Location Labs acquisition as emerging products. But what multiple do you assign to a company that could be doing $1 in EPS, growing 20% quarter over quarter in a completely recurring revenue, recurring business model? At least a 10 multiple, right? At least 10. So you're looking at nearly a double from the current share price if you get that. I mean, I know this is a long way off, but I have some more information that I'm willing to share on Verizon now. So if you go into your app store and you go into Verizon actually just integrated the SafePath Drive feature into their app. And the commentary we were given on the last quarter was that Verizon was very excited that they acquired Location Labs. They love the robustness of their product, and they really wanted to enter this market hard and swift and make a run at capturing more customers, locking them in, just making more money in general. And it seems like it's already happening a lot quicker than originally anticipated because SafePath Drive was already updated for it. There was another app that was just another update to the Verizon Smart Family that just came out for the Android side. And I can't recall all the exact details off the top of my head, but it was really child focused about screen time limitations, location tracking, etc. But it looks like Verizon's already adopting, and again, it's just multiples bigger of a total addressable market at Verizon than it was at Sprint. Just low downside. The ability to run with this business model where you don't have to pay for marketing, their costs are fixed. They have the product completed now. It's done. The products are ready. So now they just have to give it to the carriers, and the carriers have to market it. So every dollar that's hitting the top line is now dropping to Smith Micro's bottom line. Every single dollar. You're at a place of astronomical operating leverage. This business can be a cash cow, and eventually Bill, the CEO, is getting pretty old. It's likely that the company gets sold. But I know he wants to sell it much higher than this. I think that if I'm being conservative, I think this is a $15 stock as T-Mobile launches and Verizon just even starts to roll out in anticipation of the fundamentals that will follow it. But really, if they hit Verizon and T-Mobile together and say they didn't even hit AT&T, they could be on $1 to $2 in EPS. This could be a $40 stock. This could definitely be a 10 bagger from where it's trading today. And again, I know a lot of things have to go right. We're not overlooking the risks in this. This is my largest position because I think there's limited downside, as I mentioned previously, but the business model is beautiful. A business model where you don't have to pay anything to market your product and someone else does it for you. You can't beat it. Sri, I don't know if you have any questions or input, or maybe there's nothing that I hit on Smith Micro, but I would just recommend anyone listening that's interested, just go in, build an operating model of the income statement, and just look at what they could do with 20% year over year growth, which is if they sign T-Mobile and Verizon, you're going to be multiples higher than 20% year over year revenue growth. But you can see how much of that cash flows to the bottom line and how cheap this business can be. It's a great bet. Even if you lose this, if I lose this bet, I take this bet every single day forever. That's how you have to play the game. The probabilities are on your side. You assign probabilities to different outcomes. My probabilities are assigned to them winning T-Mobile, launching at Verizon, rolling out, and making a lot of dough. And I think it could be a nice position for anybody's portfolio, especially if you like recurring subscription revenue that has high forecastability and low competition.
Yep. And so what sort of like the other side, of the case you just presented? What sort of the bear case, or what are the risks that that could make your thesis go wrong? And secondly, what is the market getting wrong right now?
I don't know if the market's necessarily, I'll come back to some of the risks. I hit on some of the concerns, but I don't know if the market's necessarily getting anything wrong right now. I think it's kind of in a phase where it's prove it to me. Like, you've been talking a big game. Prove it now. You need to sign this contract. As soon as that contract is signed, I think this thing zips 30% in a day, maybe over the course of a week. But as soon as that contract is signed and announced that it's signed, institutions are starting to accumulate, and you're going to see the share price rise over time. So I think that's kind of where everyone's at now, and you can kind of see it just like tracking sentiment through social media, stock twits, wherever. I frequent a lot of platforms across the internet where there are Smith Micro investors, and that's what I get. But my concerns would be, again, I already stated, clearly biased that I believe they're going to sign T-Mobile, but the largest risk is that they don't sign T-Mobile, and somehow T-Mobile this whole time has just been leaning on Smith Micro and building their own product in the background, and then going to launch it and dismiss Smith Micro. But I think there'd be a lot of lawsuits. I'm not a lawyer or have any really legal knowledge, but it seems like if you're just leading someone on and you're constantly showing them your technology and they're confident in building their own, it seems like there's some lawsuits there. But that would be the largest one, because Verizon's still a little bit off from ramping. AT&T is still just kind of in a gray area right now. T-Mobile's the one we need to really unlock our code and get the product out there over the short term, or else they're going to be burning a little bit of cash and the business is going to stay in a wait time for a little bit. So T-Mobile is definitely the biggest risk, and I think that's why the share price is being held down right now. Did I answer that well for you?
Yep. And anything else that you want to mention before we sort of wrap up?
Just that I would love if somebody has a bear case that I didn't hit on. I would love to hear. My email is andy.walker@auguryresearch.com. I'd love to talk. We can chat. We can have a phone call, etc. I know Sri has a really competent audience. That's just a good base. People who are intelligent and actually like the game. And I just want to thank you for having me on here and allowing to get exposure to this. Yeah, thank you, Sri.
Yep.
I look forward to seeing you October 3rd.
Yep. And before we hop off, could you just sort of, number one, tell the audience where they can find more about you and sort of what you do at Augury Research? I know you mentioned at the start, but we'll mention it at the end as well.
So I would probably, one of the two best places to find us, Twitter @Augury Investing, Instagram @Augury Investing. Both are pretty active. Behind our subscription service there, we have access to a Discord where you can be a part of. It's really a community of just hardworking people trying to build first generation wealth. It is all investing, but we're also about health. We're about bettering ourselves in every aspect of life. Like we all work out. We're trying to all eat a healthier diet. We're just trying to be an alpha in every pillar of the word, really, is what it is. We're trying to build health, wealth, intelligence. But you also get access. So you have access to Discord, but you also have access to our website, which we have like a member dashboard where you can see the latest news on the companies we follow, the latest articles. I write like a Q2 earnings update for Smith Micro, things like that after every earnings. New information available. We do a monthly portfolio breakdown where we go cover every position. A lot of our members join. We have a lot of great discussions because there's people from different backgrounds, different areas of expertise that come in and just have information to offer. And I think your biggest competitive advantage as an individual investor is your network of people. Especially when you work a full-time job, you can't be at your computer 80 hours a week doing all the work. So maybe you get 20 hours a week done, but you have a whole team of 25 guys that are willing to work hard and they really want to reach their goals. And that's what we have. And I just think that these collaborative platforms, I frequent breakout investors, story trading. We have Augury. All all great. All the people behind those platforms are great. And yeah, that's basically about it for Augury. And yep, Twitter, Augury Investing, Instagram, Augury Investing. So you guys can reach out to us with any questions, or if you want to discuss Smith Micro over Twitter, etc. Feel free to follow and message.
Yep. Andy, thank you for being on. That was absolutely awesome.
Thank you for having me, Sri. It was a good time.